I want to get to profitability faster. And I've written a lot of personal blog posts about companies that don't generate revenue quick enough, and you have different sides as an investor, but personally for me as an entrepreneur, I come from the hedge fund trading world, and where cash is always king, and therefore my mindset is always to build revenue and profitability as quick as possible. But that's just one philosophy. So for me, exits in 2 to 3 years is in the same mind frame of a trader or an investment banker who's looking to get in and out as quick as possible in whatever method that may be.
I don't know, when was the last New York-based IPO? Oh, I remember, Island Systems. A couple of guys at NYU going public, $2 billion. But it's rare. So a lot of it is going to be M&A. If you're building a company that's going to be acquired. So it's worth having that in mind for the most part. That's what I see.
One thing I think is important to consider, what I think is important to consider when I talk to an entrepreneur is, of course it's really hard to predict, but one of the questions I always ask is, a lot of times you build something that seems like it'd be a very good strategic fit for a buyer. And I'll say, okay, well I'm going to put some money into this, and 6 months from now, Google comes along and offers you $30 million. Are you in or out? And a lot of times people are like, no, we're in for the big thing. Oh, really? Have you ever made any money before? Do you know what it's like to have $15 million in the bank? So what's the driving motivation behind it? Do you really want to go for the big exit? Right? When I invested in Chloe and Isabel, I asked Chantal Waterbury, and she pointed out that one of her competitors, that she thought she could do way better than, got an investment at $380 million valuation. There is no way she's going to exit her company for anything less than $500 million, and I'm absolutely convinced of that. So I knew I could go in for the long haul with that entrepreneur in mind. So I think just understanding, what do you want to do over and above, is it fine for you to exit at $10 million? By the way, if you can exit a company every couple of years for $10 million, that's a pretty great living. And there's no reason why you have to go for the $1 billion idea. Just make sure that you have investors that are also on board with the same kind of trajectory.
Is it kind of fun to talk about that kind of stuff? Right? How many people here are going to exit $1 billion? It sort of gets a little giddy when you start talking about it. The statistics are really so far really against that actually happening. From an angel's perspective, we'll take 1.2x in some cases just to get our money out, so we know how risky it is. But remember, angels can take their money out at low returns. VCs generally, traditional VCs generally can't because their business models don't support it. The average M&A now exit $97 million. Yeah, $97 million. But some of the companies you've all heard of, Picasa and others, exited at 10, 15 million. But think about it strategically. It's easier to exit at a lower number because it could be a mental decision rather than a board decision at a higher number. And the longer you stay in business, the longer the opportunity is for competitors to sort of come nipping at your surface. And if that happens, then the chances of success get diminished. So, hey, I exited my companies from the tens of millions, my family's happy, life is good. And now I'm angel investing, and I'm getting bigger returns on my angel investing. Yes. So, it's ego and greed, don't let that be part of the equation. Never, ever. Ego and greed, bad.
Brian, you brought up a good point earlier. You said, I think your wife said to you, you're losing most of your money on these investments. And a lot of people really look at, a lot of us investors and they go, oh, they're just raping and pillaging and everything is great. And they don't realize, tell me guys, what do you think is the ratio of how much do you lose against how much you win?
Does anybody here know an angel investor who's made money? No. All right. May I answer your question? It is really a low percentage. And frankly, a lot of us because we make bad investment decisions and do it correctly. We don't have portfolio theory. Portfolio theory is simple. It's the more companies, the larger investments you make, smart investments, right? The better chances you'll have at that kind of exit. But for the most part, right now, what's going on in New York and pretty much around the country is that a lot of Hollywood-type swashbuckling angels have put money into a lot of investments. I don't like calling you deals, I think it's rude. Investments, you're not deals, right? And they're waiting for something to happen, but the average period of time is 9 to 10 years. So right now the angel community is going through what I call angel exhaustion. They go home, their wives nag them. And yes, only 18% of angels are women, so they just dominate their wives nagging them. Saying, so where's the money? There hasn't been. So I think angels have to be a lot more cognizant of that, make better, smarter investments, than just swashbuckling investments. But yeah, the angels.